please don't refinance until you watch this video and just understand a little bit more about the entire process that they call refinancing. So, the most important thing to understand when you're talking about refinancing is there's two things that are at play that you need to kind of decide on what your priorities are. So just like when you purchase a home for the first time, I always explain to my clients that there's two different main numbers that you need to pay attention to. That's the upfront cost when you're buying a house, like your down payment and closing costs, and the monthly cost. Because you need to know and actually isolate how much money is leaving your pocket to buy a house in the first place and how much money is leaving your pocket to make that monthly mortgage payment to keep that place. So likewise, when we start talking about refinances, what's different about refinances is, yes, you are able to refinance into a lower rate and give you a lower monthly payment and a lower interest rate. However, you also need to be aware that there is a cost involved. And that actual closing cost is just like the closing costs when you bought the house in the first place. But you need to understand that those two things are still at play, which is, what is my actual total upfront cost and what is my actual monthly payment? So when you are refinancing or trying to make the decision of whether or not you want to refinance, you need to ask two really important questions. What would be my new monthly payment? And you need to figure out how much that's saving you on a monthly basis. And you have to find out, what are my closing costs? Now, on a refinance, you don't say like, hey, what's my down payment, right? Because it's not a purchase, it's a refinance. And so the way that you can determine what that actual refinance is going to cost you is you need to look at your existing loan balance on your mortgage statement. And then when somebody's talking to you about trying to do a refinance with them, whether it's a mortgage company or a mortgage broker or your bank or the number that you call on your mortgage statement, you need to see what the current loan balance is on your existing mortgage and then ask the person that's selling you the refinance, say, hey, what would my new loan amount be? Because sure, it sounds nice to save $100, $200, $300, or $400 a month, but is that worth increasing your loan amount by $5,000? Is it worth it to increase your loan amount by $10,000 or something higher? Only you can answer that question. Don't let a loan officer tell you that, oh yeah, you got to get this lowest interest rate and just don't worry about the equity. It'll just, you don't have anything out of your pocket and we're just going to include all those fees in your loan. Well, if they're including the fees in your loan and your loan balance is going up, that means you're paying for this. You're actually going into more debt to be able to get that lower monthly payment. Now, I'm not saying that there's anything wrong with that, because some people need that monthly payment to be lower because they're struggling to make ends meet. They're dealing with increased costs and maybe decreased income for whatever reason. And so for some people, yes, it makes sense to get the lowest new monthly payment possible. And maybe you're not as sensitive to increasing the loan amount itself. But for other people who are in the position where you want to be really careful about how your equity is touched in that refinance, you need to pay close attention on what the new loan amount is going to look like, because maybe you're trying to get to a specific equity position to be able to better your situation. Now, what I'm referring to there is, let's say you purchased a home over the last 2 or 3 years, over 22, 23, or 2024. And when you purchased over those last few years, you may have purchased with an FHA loan, because an FHA loan gives you a nice low down payment. And so you're in an FHA loan that helped you actually purchase real estate in the first place. So great job for that. That's awesome. I'm glad that FHA is an actual product for people to get into a home with a low down payment. But you gotta remember there's that mortgage insurance premium on FHA loans. So there's the upfront mortgage insurance premium that they add onto the loan amount when you first purchase a home, and then you have a monthly mortgage insurance premium. So if you bought with an FHA loan over the last 3 years, and now someone is pitching you on refinancing and saying, "Hey, we're going to refinance you into another FHA loan," you have to make sure that you understand what the new loan amount is going to look like, because eventually, if like that FHA loan, that's not your forever loan. You want to get out of an FHA loan as soon as it makes sense financially. And so the goal when you're in an FHA loan, when you're thinking about refinancing, is that eventually you want to move into a conventional loan out of the FHA loan. Now, you may not be able to do that right now. You may not have enough equity in the home for it to make financial sense to refi from an FHA into a conventional loan, but you have to look at the long-term pros and cons, right? And so if your long-term goal is to eventually get enough equity in the home to be able to refinance out of an FHA loan into a conventional loan, then whatever refinance that you're doing right now, you should pay close attention to your equity position. And the best way to understand what your equity position is look at your existing loan amount and what is the new loan amount on the new loan. So when you're trying to make that decision, should I or should I not refinance right now? The answer to that question is everybody is different, and everybody's financial position is different, and their financial goals are different. And so you need to work with a loan officer who listens to what your goals are, understands where you're at right now and where you want to be, so that that refinance that you do with the loan officer is actually serving what your future goal is. If that loan officer is just pushing you on like, "Hey, let's get you the lowest interest rate possible," or whatever they're trying to push you on, just slow down and understand that you need to have an open and honest conversation with them, and try to ask them for just a few different options. Say, "Hey, what would the monthly payment look like if I increased my loan amount and I added all the closing costs to it? What would that monthly payment look like?" Or if you're in the position to where you may not need as much monthly savings and you want to protect your equity position, then say, "I also want to see an interest rate that maybe is a little bit higher, but maybe something that I'm not paying for the closing costs itself." Now, they'll always say, "Oh, don't worry, you don't have to pay out of pocket." That's still not, that doesn't mean that like you haven't paid the closing costs, right? Just because you're paying no closing costs out of pocket doesn't mean you're not paying the closing costs, because it comes down to the loan amount. So what was my previous loan amount? What is my new loan amount? When you're talking to someone about a refinance, also ask them what is the lowest interest rate with the highest costs, just to give you an idea of what that looks like, and what's the higher interest rate with no costs, so that you can compare those, because only you know your personal and household financial situation and your financial goals. So make sure that whatever you do with that refinance serves those goals. Thank you so much for watching. I hope that if you have any serious questions, that you just pick up the phone, give me a call, give me a text. I love talking to people about mortgages. It's fun. It's, owning real estate's a great way to just build generational wealth. But you know what? There's a lot of complicated things in this process. So I'm happy to explain them. I'm happy to go through it step by step so that you can feel confident in the entire process that we call the refinance.